afternoon. This is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, a little B for the currency, and Bitcoin, big B, for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee, taking a look at our top stories. Amid new price highs, Ether has overtaken Bitcoin options volume. Ether's options market saw record trading volume of over 1.3 billion, far above Bitcoin's 879 million. The data represents a shift in investor focus from Bitcoin to Ether, as analysts suggest investors are looking to diversify into other digital assets. And crypto exchange Coinbase is expanding support for Tether to its general users, one day after listing the world's largest stablecoin on its Pro platform. Customers can now buy, sell, or hold USDT, which is used to buy about 66% of Bitcoin, according to data firm Crypto Compare. And finally, the Criminal Investigations Division of the IRS has arrested Roman Sterlingov, the alleged operator behind crypto mixing service Bitcoin Fog, last week, a service designed to obscure Bitcoin transactions. But CoinDesk's Nick Day writes, it appears the IRS used data from now defunct exchanges like BTCE and Mt. Gox to track Sterlingov down, reinforcing the idea that users give up much of their privacy when signing up to crypto exchanges, and that government officials may hold on to that data for years. Looking at Bitcoin, BTC in retreat during U.S. trading hours following an initial drop during Asian hours as buyers took profit near the $58,000 resistance level. Right now, the CoinDesk Bitcoin price XVX index is trading at 54,552. Bitcoin is down about, just over 6% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news and events.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, here's a live look at the Bitcoin index launched by S&P Dow Jones Indices, a story CoinDesk broke yesterday. It's unconventional in the sense that the S&P Bitcoin index, it tracks it measures price appreciation, not the actual price of BTC. So when you look at the dollar value listed, it's quite low, 76.78, but it's not the actual price of Bitcoin. The year-to-date return is up, however. The one-year return is up 558% over the past year. The year-to-date return is just over 97%. An Ether index and mega cap index of BTC and ETH combined have also been created. S&P reps telling CoinDesk the actual index value isn't so much as important as the change in that index value over time. And joining us now to discuss is Quantum Economics founder and CEO Mati Greenspan. Welcome, Mati, to the show.
Thanks for having me.
All right, so we're seeing the S&P indexes, ETFs, financial products tied to Bitcoin. How will that impact Bitcoin price going forward in your view?
So, of course, more financial products built on top of Bitcoin, I think, is generally considered a good thing by most of the people in the community.
Fair enough. But we see Bitcoin pulling back right now. What is your near-term analysis on Bitcoin?
So at the moment, it seems that we're in the throes of alt season, and Bitcoin's found itself a nice, comfortable range a wide range that is, between 48,000 and 64,000, respectively. And right now, we're just kind of in that middle of the range and kind of lackluster, not getting any clear trading signals on the short term from Bitcoin. Which basically gives, traders, margin traders, people who are actively pushing money around, all the incentive in the world to go towards some of the other coins, which are some of them performing very well. So this is how alt season is born.
Well, speaking of which, Ether options activity has flipped Bitcoin. Why is ETH on this record price rally, but BTC is in retreat?
Yeah, so I think that Ethereum, for the large part, is responsible for a lot of the growth that we've seen in the crypto market lately. I mean, we've seen decentralized finance growing significantly within the last few months. And the NFT craze is mostly happening on top of the Ethereum blockchain. So I think that the most exciting new innovations are actually happening in Ethereum. So that's a large part of the growth that we're seeing in the price right now.
There are whispers of a flippening happening, a potential event in the future where we could see the price of Ether surpass the price of Bitcoin. Do you see that as a possibility?
The price per coin, I think that we're quite a way off, even though Ethereum is growing very fast right now, around $3,000 per coin. I mean, to come up to $50,000 per coin, I think would be a bit of a stretch, to think that Ethereum might stay within that, or that Bitcoin might stay and let Ethereum catch up. I think is a bit naive.
All right. What's your
even in market cap? I mean, we're quite a way off from any kind of flippening.
What's your long-term view of Bitcoin?
Quite positive. I think that we're seeing adoption on a global scale. I think that we're seeing adoption from institutional players, hence the need for the products the advanced products that you mentioned earlier. And we're seeing a lot of hedge fund managers come in and figure out that they can use Bitcoin as a hedge for their portfolio. I would say that the future looks quite bright for Bitcoin and for the entire crypto industry.
Do you have a price target for the end of the year?
Oh boy, the end of the year. Anywhere between $100 and $1 million.
Okay. That's quite a spread. That's quite a spread. But do you have it, I don't know, any modeling that you've priced out that, for end of summer, end of year?
Well, I think that we're looking quite closely at the Federal Reserve, and what people keep asking, where's the top? When's the top? And clients and journalists alike, and everybody kind of wants to know when the cycle is. And I think that a lot of that comes from the predictions that we've had from the likes of Plan B and the stock to flow model, which kind of makes sense. I mean, Bitcoin has been on this repeating cycle since its invention on the four-year cycle that revolves around the halvening event.
All right, Mati.
But yeah,
Mati, thanks for joining us this afternoon. Appreciate you coming on.
Of course.
All right, that was Quantum Economics founder and CEO Mati Greenspan. Coming up, an update on Taproot's speedy trial activation to upgrade the Bitcoin network.
CoinDesk indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index XBX has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. It appears the so-called speedy trial activation of Taproot, an update to the Bitcoin network, which aims to make it more scalable and private, will not get the support needed from miners this week, according to Taproot.watch. You see there, 20% of miners have intentionally not signaled their support for the activation, making the 90% consensus needed impossible this time around. And joining us now to discuss is CoinDesk Director of Research, Noelle Acheson in Madrid. Welcome, Noelle.
Hi, Christine. How are you doing today?
Great. It doesn't look like that speedy trial activation on the Taproot update will go through. What happens from here?
Well, this is actually a very interesting question, but Christine, if you don't mind, let's step back a second and just quickly review what's going on here for the viewers that are not familiar with the speedy trials and with Taproot. In fact, Taproot, for those who don't know it, is an upgrade to the Bitcoin protocol. That's kind of a big deal because the Bitcoin protocol is really conservative and sort of set in stone. This is the most significant upgrade to the Bitcoin protocol since the block size upgrade back in early 2018. And the fact that this upgrade, unlike that one, is not controversial at all shows the utility of it. What does Taproot do? I'm not going to go into all of the technical details because they are quite arcane, and I'm not an expert on that. But what I'm most interested in of the functionality of Taproot is that it's going to make Bitcoin multi-signature transactions cheaper, more private, and easier to deploy. It's going to make complex transactions, I guess you could call them smart contracts, more scalable and private. And it's also going to give a boost to the functionality of the Lightning Network. And all of these are going to overall enhance the usability of Bitcoin, which is kind of a big deal, could increase the market. That's why a lot of the Bitcoin community have been paying attention to this, but also Bitcoin investors have been paying attention to this. Now, I said it's not controversial because of the fairly obvious benefits, but the method of its activation, that is controversial. Everyone had different opinions on how this should be done. The compromise that was reached was something called the speedy trial, which kicked off on Saturday, on May the 1st, with the most recent difficulty upgrade. And the idea is that miners have 2 weeks in which to signal their support for Taproot. If 90%, as you said, Christine, signal support for Taproot, then the upgrade gets locked in and it is activated in November. But as we can see here, just over 25% of the blocks in this 2-week window have already been processed. 20% have not signaled, so they're not going to get the 90% this time round. This is not a big deal. This is, we've all had days where we see in our email in tray so many reminders about signups and things we should have done, and we're like, oh yeah, I really should have done something about that. I think that's what's happened here. This is the first one. I think a lot of these non-signalings is not a rejection. It's more like oh yeah, I was supposed to do something there. They get to try again in the next 2-week window, which starts in just under 2 weeks. And if 90% is not reached in that window, then they get to try again, and so on and so forth, up until what they call up until the limit of August the 11th. If by August the 11th there has been no agreement, the network has not achieved 90% miner signaling in favor, then back to the drawing board, Christine. And that is something that would probably be taken as bad news by the market, because This is a really quite exciting upgrade.
On that note, could that be a reason why we are seeing Bitcoin in retreat right now?
It could be. It could be part of the disappointment, as it were. And it could also be behind the increase that we saw at the beginning of this week. Excitement that, yes, upgrades, wonderful. But there's a bigger picture here, which is kind of exciting. And this is the reminder to the investment community at large that Bitcoin is a technology. We all know the store of value use case, digital gold. Bitcoin is not only resistant to fiat debasement, it is something that is fairly immutable. It has a hard cap. We believe in that. We understand the store of value proposition. But this reminder that Bitcoin is also a technology is going to make quite a few investors sit up, in my opinion. Obviously, nothing I say is investment advice. But here's the thing. When you buy gold and you put it in your vault, you don't wonder about how it will evolve while it's sitting there. Bitcoin is a technology that can change, can continue to improve. And to understand, for more people to understand that when you're investing in Bitcoin, you're not just investing in a store of value, you're getting in early on effectively a very liquid technology play with huge upside.
And it shows that Bitcoin, the network, is truly distributed. It requires consensus, and it's a slow slog to get that done.
And it should be. It should be a slow slog because there's so much value now riding on the Bitcoin network.
It's the price of being independent and
absolutely.
From the government.
And so we can rest assured that the fact that it's gotten this far means that it has gone through so many hoops. And the fact that there is relatively unanimous support for this is a very strong sign that Bitcoin will continue to evolve carefully, but in the positive direction to improve usability and value.
Noelle, switching topics, you have a newsletter, Crypto Long and Short, that is published on Sundays. And in your latest issue, you wrote about companies like Tesla, MicroStrategy, Square, Meitu, and most recently, South Korean Japanese video game publisher Nexon. that are trading cash reserves for their Bitcoin in the hopes of battling inflation and earning some profits from BTC's record price appreciation. But you also suggest another game-changing reason to put Bitcoin on the balance sheet is its borrowing power. And you weave together three seemingly unrelated stories to highlight this mega trend you foresee in the future. Walk us down these thoughts.
I will, and thanks, Christine, for the shout out for that. Where I was going with this was looking at the use case for Bitcoin as collateral. Bitcoin is the best collateral out there. This isn't really news. Why is it the best collateral in the market today? Because it's a liquid bearer instrument that trades 24/7, 365, has no default risk and no duplication risk. And this is something that our industry's crypto lenders and their clients know. They know this. But where I see crypto lending potentially taking on an entirely new vector of growth is through the growing presence of Bitcoin on balance sheets. Corporations have to hold cash and cash equivalents for their working capital needs, but cash equivalents is not really cash. And what many corporations do is they will use their cash equivalent assets, which are usually US Treasury bonds or other high-grade instruments, in a sort of repo. They will use those as collateral to get working capital cash. And we are probably going to see the same thing start to happen with the Bitcoin that is being held on corporate balance sheets. Now, why would you want to do that? Well, the whole story about holding Bitcoin on balance sheets is something that you've already talked about quite a lot. But for many corporate treasurers, it's a way to protect your cash and cash equivalent holdings against fiat debasement. We saw with the Tesla earnings last week, it is also a way for corporate treasurers to, when they need to, realize some additional profits. I'm not saying that was their intention, but it did have that effect, which certainly didn't hurt. And it could be a way for corporate treasurers to smooth their working capital needs if they don't want to sell the Bitcoin, either because they don't want the taxable event or because they think it continue to appreciate in price. So Bitcoin as collateral, again, hardly any paperwork. It's a bearer instrument. If the borrower defaults on the loan, the lender can just sell the Bitcoin into the market.
But does its volatility pose a problem to that at all?
It certainly does. Bitcoin is volatile, and its presence on many corporate balance sheets is certainly controversial. But it's volatile in the short term. In the long term, corporate treasurers that are taking this step seem to believe that it is going to be less volatile or depreciate less, even with its volatility, than the fiat that they're holding.
All right, Noelle, very fascinating stuff. Everyone, sign up for the Crypto Long and Short newsletter. You can sign up on CoinDesk.com.
Thank you, Christine.
Thanks, Noelle. All right, that was Noelle Acheson, CoinDesk Director of Research. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.